Clara, many thanks for making time to speak to us. $491.5 million in this particular facility, and we're seeing that Uganda has exhausted its quota. This is 100%. Is this the first time that this is happening, and is there a way to tailor-make the direction of this payment to go specifically for, let's say, sectors? I'm calling it a payment, but it's not particularly a payment, to go to particular sectors.
Thank you, Arnold, and thanks so much for having me. So Uganda is getting resources under the Rapid Credit Facility. This is an emergency financing facility that the fund has available for countries that are experiencing an urgent balance of payments caused by an unexpected shock. It can be weather-related, it can be COVID-related now. So to respond to COVID, because of the intensity of this crisis, and the unprecedented nature of this crisis, the IMF changed the rules of access to this facility, which used to allow only for 100% of quota of access. Now countries can access up to 100% of their quota.
Before it was 50?
Before it was 50 for this specific facility.
Right.
So now countries can have access to 100%. For Uganda, 100% quota, it's 361 million SDRs. This is the IMF basket of currencies. This is why the exchange rate fluctuates. So we thought it was going to be 490 million, then it's going to, at the end, yesterday it was 491.5 million. That's why it's a funny figure. But the amount is not unprecedented. It responds to the nature and the intensity of the shock. So we do think that the COVID pandemic is creating a large shock for the Ugandan economy in the balance of payments and in the fiscal accounts. And therefore, this level of access can contribute to fill this shock. You were also asking me about the use of these resources. The facility is put together to help countries around the world, and in particular, this facility, low-income countries, deal with the impact of COVID-19, of the pandemic. So in the particular case of Uganda, what the authorities have decided that they would like to do is use most of the resources to buffer the position of the central banks to make sure that reserves can stay at comfortable levels. So about 70% of these resources are going to go to support the balance of payments in Bank of Uganda, and the rest, which is about $150 million, would go to the budget to support government efforts to respond to the pandemic. Now, what are these efforts? What we understand is that the resources are going to be used partly to respond to the health pandemic, so to acquire health supplies, etc., partly for the vulnerable population that really need to be cushioned to respond to this crisis. And the greater part is most likely going to be used for the private sector. And the thinking is that through Uganda Development Bank, some Ugandan companies are going to be supported so that they can produce domestically some resources that can be useful to respond to the COVID crisis.
Right. You've mentioned something that's interesting on the side of the reserves. Now, this kind of comes as an echo to, or let's say a reactionary response to what the Africa Department Director, Abebe Selassie, said at the IMF recently. And he kind of alluded to the fact that countries that are running a flexible exchange regime at this particular time could consider drawing down on their FX reserves. Now, earlier on you did mention that Uganda might be having, well, before the crisis, 4.4 months worth of FX cover. As per right now, where do you see us standing, and is this facility coming in to actually mitigate some of the pressures that we are seeing on the FX reserves as they stand?
Absolutely. The pressures on the balance of payments caused by this crisis are quite significant. For example, remittances are expected to halve, more or less. Foreign direct investment is also expected to halve. Inflows coming from tourism and in general from exports are also going to decrease significantly. So when you look at the dynamics in the balance of payments, indeed the balance of payments is going to take a large hit. So without any kind of external support, reserves could decline to a concerning level, or not concerning, but not comfortable levels. So the thinking about using part of these resources to cushion this impact is to ensure that the reserves can stay at least at 3.5 months of imports. So this is not a magic number, but this is the number that, according to our calculations and according also to Bank of Uganda experience, can ensure that confidence is maintained, that the risk premium of the country is not increased, and that therefore Bank of Uganda can do its job to ensure that there is macroeconomic stability and there is relative exchange rate stability. So indeed, Uganda is going to draw down on its reserves, because from 4.4 months of imports, we are projecting that reserves are likely to go down to about 3.5. But with these resources that are coming from the IMF and other resources that are anticipated from other development partners, at least they would stay at around 3.5 months of imports, which would guarantee this stability and this confidence among the international community.
Right. Finally, Clara, when anyone hears any facility from Bretton Woods institutions or even the FDB, the first thing that they wonder is debt to GDP and debt service. Let's touch more on that issue. Now, I understand this particular facility, like many others, from the Fund to Developing Countries, is garnering an interest rate of 0. And now this leaves me wondering, what is our debt sustainability analysis looking like if we factor in this facility on top of, well, there's another from the World Bank in the works. What's our debt sustainability looking like, away from the 37% debt to GDP that we're already bothering with?
Thank you. Let me say that the way we are looking at things at the IMF these days, and the way I think we should be looking at things, is that saving lives comes first. That we are under an unprecedented health crisis, that people are really losing their lives. Many people are also losing their sources of income. So the key priority these days should be responding to the health pandemic, so saving lives, and trying to ensure that the most vulnerable and the private sector can also keep their livelihoods, so that what can be a liquidity crisis doesn't turn into a solvency crisis. So that's my first point. Like, that's not our key consideration. Key consideration is save lives and save livelihoods to the greatest extent as possible. But having said that, Uganda's debt still remains sustainable. We have updated our debt sustainability analysis, and these will all be published in the next few days as part of this exercise. And we have incorporated there the thought that not only our resources, but other borrowing will have to happen to fill the large financing gaps that are opening up. So with these developments, we do see that debt can go, we are at 37, as you mentioned, it can go to 45 this year, and over 3-4 years, we see it peaking close to 60%. So we do see it at 59.5, close to 60%. However, when we do our whole debt sustainability analysis, debt still remains sustainable, and Uganda remains at low risk of distress. This doesn't mean that vulnerabilities have not increased, because, for example, when you look at the debt to revenue ratio, it is increasing, which means that the burden on the repayment of this debt is becoming more important. And what this tells us is that the efforts that the authorities are already making need to be intensified once the crisis is over. So these efforts go in the line of enhancing domestic revenue, domestic resource mobilization, improving the public investment management so that the projects are really giving a good growth dividend that would allow more resources to repay debt. And in general, the plan is that over the medium term, once this big scale-up of infrastructure investment is over, there would be some consolidation and oil will start flowing. So when you put all of that into our debt sustainability analysis, vulnerabilities have increased, but debt remains sustainable and risks of debt distress remain low.
Clara, just before I let you go, the elephant in the room is countries like Uganda don't have a good record when it comes to the corruption index. Money ends up in the wrong pockets often. How do we make sure that this 490 plus million US dollars gets to the healthcare sector, gets to the health workers, gets to where it's actually supposed to go?
Thank you. We are, of course, very committed and look forward to a transparent and accountable use of the resources. So what the authorities have agreed to do is take 3 lines of action, which I think can be very useful to make sure that this really materializes. One is that there is going to be a specific and separate reporting in a separate budget line for all COVID-related expenditures, so it's easy to monitor how the resources are being used. The second one is that the authorities have agreed to publish all large procurement contracts that are being done with these resources. So that would ensure transparency and accountability. And finally, in about a year, there will be an independent audit conducted on the use of these resources, and the results of that audit will be published. So we think that these are good mechanisms to ensure transparency and accountability.
Clara, many thanks for making time to speak to us.
You're very welcome. Thank you, Andrew.